Yo, welcome. Thank you guys so much for tuning in. Today's video is going to be a weekly market outlook for the week of August 26th to August 30th. And yeah, let's get right into it. So first off, I do want to take a look at the economic calendar for next week. All right, so we do have a red folder news on Tuesday, Thursday, and Friday. No news on Monday, however. So tomorrow, yeah, let's just see what that does. We don't really have any we don't want to have any CPI, FOMC, or NFP next week. So it's not gonna be extremely volatile, but yeah, just know that we do have some red folder news on Tuesday, Thursday, and Friday. And yeah, that's what usually taking a look at the economic calendar kind of helps me align myself with the weekly template. But yeah, we'll see. So I always start off my weekly analysis on the dollar, and I always want to take a look at it on the weekly time frame. So higher time frame first, and then break it down into the lower time frame. So based on how we closed here on the weekly time frame on the dollar, I can anticipate, right? I'm anticipating for prices to take out previous week's low. So this is the weekly candle right here. And if you guys are wondering, this is just an indicator that I use. Technically, this is a 4-hour chart, but the indicator allows me to see this is the daily candles, this is the weekly candles, and this is the monthly candles. Daily, weekly, monthly. And like I said, it's an indicator. It just allows me to stay in alignment with the higher time frame and what the higher time frame are doing. So like I said, based on the weekly candle closure, I can anticipate for next week for us to take out previous week's low next week. So that would be my weekly draw of liquidity. And a thing I do want to note is that here on the daily time frame, we actually took out a significant swing low here, and we are trading within a monthly fair value gap. This monthly fair value gap should be respected if we're bullish, like on the monthly time frame at least. But if we close below this monthly candle right here next week, if we close below it, I'm going to treat that monthly fair value gap as an inversion level. So inversion basically just means support turned into resistance, resistance turned into support. And yeah, just know that we are trading inside a monthly fair value gap right now. But there's nothing here on the 4-hour time frame at least that is telling us that we are going to reverse to go and continue higher. I'm still liking the idea of us trading lower here. And yeah, weekly objective next week is going to be previous week's low. Another thing that I do want to note out is we are closing on the monthly time frame this week or the upcoming week. So if you think about power of 3, right? A candle is always going to create a open, right? The opening price. And in this case, it's a down close candle. So open, we created the high right here. And then now we're going to create the low. So in terms of power of 3, there is about 4 things they can do. So open, high, low, and then close. Basically, what I'm trying to draw your attention to here is usually near the end of the candle's creation, prices is going to retract or retrace into the 0.2 to 0.3 of the candle's range. So in this case, we are creating a down close candle, and we expanded here the previous month. So in this month, we expanded a lot. So like I said, we can anticipate some sort of monthly power of 3 actually near the end of this week maybe. But like I said, I'm just anticipating On the lower time frames, maybe on Wednesday, Thursday, or Friday, will tell me when or if we will, if that idea is going to pan out. I just want to, bring that into perspective and just allow you guys to have some type of awareness to it. And another thing is, I'm also anticipating for this upcoming week for us to create a weekly candle, or not a weekly candle, a weekly fair value gap. So I want to see us create a weekly fair value gap. So what I mean by that is, this next upcoming week, I don't want to see us retrace all the way back to the previous week's high or low. So I don't want to see us retrace all the way up here and then continue lower. I actually want to see us open, create the high, and then kind of consolidate for the monthly closure. And this will set us up pretty well into the upcoming month. So the upcoming month's monthly candle, I am anticipating for that monthly candle to take out the previous month's low. So if we do create a weekly fair value gap, I do want to see us retrace into that weekly fair value gap and then take out previous month's low. But that's for next week's analysis, and I feel like I'm looking too far into the future here. There's no need for you to be trying to predict that far. I'm just trying to anticipate. Like I said, I just want to bring it into into you guys' mind right now, just so you guys can be aware of what's actually going on right now and what's going around in my head. So like I said, I'm anticipating for us to take out previous week's low, and you're probably going to be thinking, okay, so when will we take out previous week's low? Well, I'm anticipating for us to take out previous week's low actually on Monday. So if you guys take a look at how we closed here on daily time frame, so this is, like I said, this is the daily candle right here. So the candle I want to draw your attention to is this one. And based on that daily candle's closure, I'm anticipating for us to take out that previous day low. So previous day low is also previous week's low. So we have time frame alignment between the daily time frame and the weekly time frame. And let's go into the 1 hour chart here. So prices is actually suggesting the idea that we will also take out this previous 10-hour low as well. So we have time frame alignment between these higher time frames, and it's suggesting the idea of us taking out previous day low on Monday. So and like I said, previous day low is previous week's low. So previous day low, I'm gonna put a little plus sign next to it because I'm anticipating that to be the draw of liquidity. And yeah, that's my analysis for the dollar at least. And let's go into the indices. So first off, NQ. On NQ, okay, let's backtrack just a little bit. Dollar, right? The dollar is bearish, so we're seeing lower prices on the dollar. If we're seeing lower prices on the dollar, that means higher prices should be seen on the indices. So the dollar and like the indices like NQ, ES, YM, they should be trading inversely. So if dollar's going lower, NQ, ES, and YM should be going higher. But based on how we closed here on the weekly time frame, this weekly candle here, I'm not too, just purely based on its closure, I don't want to, say, okay, we're attacking previous week's low, or I don't want to say that we're going to take out previous week's high. I'm probably going to be on the lower time frames, I'm probably going to be trading, lower time frame models, just intraday models in general. I don't want to, anticipate anything just yet, because I do want to see us, if we are bullish, right? If we are bullish, we should disrespect this 4-hour FEG here. So this fair value gap on the 4-hour time frame, better known as the 4-hour SIBI, should be disrespected and closed above if we are going to attack previous week's low. But if we are still continuing to disrespect this 4-hour SIBI here, we should retrace back inside this previous week's low, which is also the weekly fair value gap's high. So I'm not too, too keen on either sides here. I would rather just sit on the sidelines and trade intraday models. And intraday models is basically scalping, targeting session highs and lows or even hourly highs and lows. But on the higher time frame, like the daily, the weekly, and the monthly, I would, just sit on the sidelines here. And like I said, we are closing here on the monthly time frame as well next week. So based on this monthly candle here, like I said, we're probably going to set up this upcoming week will probably set us up for the next monthly candles open. So if we have created this weekly fair value gap here, and if you guys are position traders, right, that means position traders or kind of like longer swing traders, that you guys are gonna have like, you guys are going to be in a position for like days, maybe even weeks. But based on this monthly power of 3, you guys can, I'm not suggesting this. I'm not a financial advisor. I'm nothing like that. But if you guys are some sort of like, like I said, position traders, you could take a long here, take very small risk, maybe one micro contract and target previous month's high. And whenever we trade back inside this weekly fair value gap, because this weekly fair value gap should hold if we are going to take out this monthly high, which I am anticipating, unless we get some sort of like completely displaced right below this weekly fair value gap, then that's a different story. But just anticipating here, like I said, higher time frame, we're bullish, but on the 4-hour time frame right now, we're not as bullish as we are. So, and yeah, that, like I said, I would rather just sit on the sidelines here and trade intraday models. If we're bullish, we should disrespect this 4-hour SIBI and take out the SMT highs. So we do have SMTs here at the highs, which suggests the idea of us trading lower. But if we take out these highs, then we're not bearish. There's a lot of if-then statements. And yes, it's going to be a little bit different compared to NQ, because on ES, I'm actually anticipating for us to take out the previous week's high. I don't want to see us retrace into the weekly fair value gap first. I want us to take out the previous week's high and then have some sort of retracement if we do retrace it. But if we don't, then we don't. But I am anticipating on ES to take out previous week's high here. And considering if we can actually take out previous week's high, then we have previous month's high as another draw of liquidity. And previous month's high is all-time highs as well. So yes, we're a lot more bullish, and it's more clear what the draw of liquidity is. On NQ, it's a little bit more unclear. And yeah, that's going to be my weekly analysis for NQ, ES, and the dollar. Dollar overall bearish. NQ, I would sit on the sidelines and wait for more information. ES, previous week's high will be the draw of liquidity, just based on my understanding of the markets. And I did want to go over some trades that I took the previous week, but I don't know if you have enough time for that. I'll just go over like 2 trades that I took this previous weekend. And yeah, so we had this A+ trade setup on Thursday here that I do want to go over with you guys. And I already have done a very thorough trade breakdown and trade recap on one of my YouTube videos. You guys can just look for that, but I'll go over it briefly here. So on Thursday, August 22nd, 2024, I was anticipating for prices to, or actually, coming into Thursday, I was rather patient and I was unclear of where prices really wants to go in the higher time frame. We didn't really show willingness to continue higher or lower. It was a slower move. So let me just go into the actual charts to show you guys what I mean by we didn't show a willingness to trade higher or lower. So this is actually Thursday's price action here. So this is Thursday's price action and coming into that morning's during the morning AM session, right? So at 9 a.m. on Thursday, I'm already on the charts. I'm live streaming. Just look at how prices is moving up here, right? We're overall, like I said, we're overall on the higher time for we're bullish, but the move up this Tuesday, Wednesday, and Thursday was extremely lethargic. There was a lot of pullbacks, and it wasn't, you know, it's not displacing higher. It's very lethargic. So coming into that morning, like I said, I was very unsure if we are going to continue higher or will we, retrace back inside this price range. But if we were going to continue higher, we should respect this hourly FEG. And ES, we had already taken out June 23rd's high of day. However, on NQ, we didn't. So there was that SMT that I was also paying attention to. And let's go back to here. So like I said, I'm very unclear of what NQ wants to do. We're bullish, but we're not extremely, we're not displacing higher. It's a very slow move up. It's a gradual move up. There's a lot of pullbacks. So with that, I was electing to trade intraday models, and I was going to only shoot for lower time frame objectives. The trade that I took today was actually based on how we closed on the 30-minute and 1 hour time frame. We had a bearish closure on both time frames, so I was anticipating for prices to take out their respective lows. So based on how we closed here on this 1 hour candle, on this 30-minute candle, I was anticipating for prices to take out that 30-minute low and this 1 hour low. So the 30-minute, the 1 hour was suggesting lower prices. I'm sorry. And I don't trade based off the 30-minute and the 1 hour models. Like I need the 15-minute model to also be in alignment with the 30-minute and the 1 hour time frame. So like I said, hourly 30-minute were bearish. On this initial 15-minute candle here that we opened up or we closed at 11, based on that 15-minute candle, I was unsure if we were going to continue lower or not. Because based on this 15-minute candle, just on how it looks and on its appearance, it looks like a doji candle, and there wasn't really much displacement here, lower here. So I was hesitant to take any trades. So I wanted to wait for the right time to target the hourly low and the 30-minute low. So I do want to note out here too, on the 30-minute time frame right here, I'm treating this 30-minute fair value gap as a breakaway gap based on my fair value gap theory. This fair value gap shouldn't be retraced back into. I wanted to see prices take out the 30-minute low first with the next 30-minute candle before retracing back into this 30-minute fair value gap. So my model here, my trade, is actually based off of how we closed here on this 15-minute candle. And now we have time frame alignment. So this 15-minute candle right here, how we closed, suggests the idea that, okay, now we are going to take out that hourly low, that 30-minute low. That's time frame alignment. So ICT states time then price, time then price. This is my understanding. I don't know if this is the correct way or whatever, but this is my understanding of time and price. So based on this 15-minute candle's closure, we closed bearishly, right? And I was anticipating already for us to take out the hourly low and the 30-minute low. So on the lower time frames, I'm going to look for some sort of PD array to enter off of to attack that 15-minute low / 30-minute low / hourly low. So on the 2-minute time frame, there is a 2-minute fair value gap, and if you guys can see the breaker pattern, this becomes like a unicorn model, where there's a high, there's a low, there's a higher high, and there's a low low. That's a breaker. But a breaker that aligns with a fair value gap, I'm not too sure if this is what ICT states or has, came up with, or if it's like just ICT traders just coming up with random bullcrap. So this entry pattern actually has two confluences, that breaker and that fair value gap. So I enter here at the 2-minute fair value gap. That aligns with the breaker. And I'm targeting the 15-minute low. That's my low hanging fruit, because like I said, based on the 15-minute power of 3, I was anticipating it for us to continue lower already. So on the 1-minute time frame, it's a little bit more clear, but we retrace back inside the 2-minute fair value gap, and prices actually ends up taking out the 15-minute low, the 30-minute low, which is also the hourly low because there's time frame alignment, and we end up taking the previous day New York PM session low. This trade, A+ setup. I failed to mention here just now that the reason why we created this bearish 15-minute power of 3 is because we retraced back into the low end of the RTH gap low. So let's take a look I'll show you guys what I mean by that. So this is the regular trading hour gap here. All right, this is it. So we actually gapped up on Thursday. So we gapped up, and there's a couple of scenarios that could play out whenever we gap up or gap down. But since we gapped up, I'll tell you guys what the scenario is here. So if we gapped up, right, if we're bullish, we should treat this regular trading hours gap as support. So whenever we come down into that gap, we should show willingness to trade away from it. And whenever I say show willingness, that just means displacing higher. Just you really want to see prices make that energetic move away from the RTH gap. However, on Thursday of August 22nd, 2024, prices filled that RTH gap. That means we disrespected it, and we have a candle closure below it on the 15-minute time frame. So whenever prices here, this is that 15-minute candle I took my trade based off of. Look what happens whenever we retrace back inside the RTH gap low. We retrace back into it, and we had a bearish reaction. So a part of my trading model is this question where I ask myself, why did prices create that bearish power of 3 or bullish power of 3, depending on if you're longing or shorting? So in this case, I'm shorting. So why did we create this bearish closure, this bearish candle closure here? Well, we retraced back inside an RTH gap, and we gapped up, but we didn't treat that gap as support. So we closed below it, and whenever we trade back into it, that gap now should be treated as an inversion level, which we did. We treated it as an inversion level by disrespecting it. And yeah, so that's just another confluence that I had in this trade. And let's see if there's anything else that I do want to go over. I think that's about it, to be honest. We had, a disrespect of this hourly SIBI or BISI. So whenever prices close below this hourly fair value gap here, this hourly BISI, and we close below it, that tells me that, hey, we're disrespecting bullish PD arrays. That means we could be seeing lower prices. And yeah, that's going to wrap it up for today's video. It's a little bit of a longer one, but I mean, I'm sure you guys got some knowledge from that video. And if you guys do want some more, if you guys do want to check it out, I have a Discord channel that you guys can join for free. I don't really find the reason for me to be charging for anything, because I mean, God created me as a human, and humans are supposed to help each other. And if you guys do find that video helpful, you guys can join the Discord, where I can help you guys understand the way I understand prices a little bit clear. And yeah, it is a growing community. We are about to hit 100 members. So if you guys do want to check it out in my YouTube bio. I'm pretty sure it's there. And yeah, you guys can ask me questions. We can even hop on calls together, one-on-one sessions. I don't mind that. And yeah, thank you guys so much for watching, and until next time, peace out. Skadoosh.